Premiums are increasing, benefits are being cut, and some plans are disappearing entirely. Medicare has some big changes that we're already seeing for 2026. And with all these new shakeups, many Americans are being forced to reconsider their Medicare plans, whether they want to or not. So in today's video, we're going to break down the 5 most popular Medicare plans for 2026, which plans are gaining popularity, which plans are quietly fading away, and what you should do now before it's too late. Some of these trends may surprise you, so make sure you stay tuned to the end of the video for some more tips and tricks. Let's start with a top secret Medicare plan that's been growing in popularity, and that is Medicare Plan G, high deductible version. So Medicare Plan G is a Medigap plan, which means it offers all of the benefits of Medigap, also known as Medicare Supplement plans. That means no networks, no pre-authorization, no referrals, and the ultimate flexibility to take charge of your healthcare. You've likely heard of the regular Medigap Plan G, as it's one of the most popular Medigap plans available because it offers the most comprehensive coverage available to new enrollees. However, you likely haven't heard about the high deductible version. Now, the high deductible version will offer all of the same benefits as Medigap Plan G, meaning it will basically cover everything except for that Part B deductible. But there is one catch. As mentioned, it is the high deductible version, and in 2026 that deductible is $2,870. So you'll be responsible for the Medicare copays or coinsurance until you hit that number. After that, your plan would take on the remainder of the costs. So why would this be a plan that would interest you? When you run the numbers, adding up all of your monthly premiums to the potential deductible that you may have to hit, plus that Part B deductible, then you may find that it's actually more financially advantageous. Let's take a quick look. So these are some of the plans available on Medicare.gov based on the information that I put in. If you put in a different location and you answer the questions differently, you'll likely see different prices. As you can see here, it's a pretty wide range of prices, but this is narrowed down based on the information that I put in. So Medigap Plan G currently could range between $102 to $387 per month. So you would multiply your monthly premiums by 12 to get your yearly costs and add that Part B deductible, and those are your total costs for the year. It doesn't really matter how you utilize your plan, that will be what you pay. So let's say we had sort of a middle of the range plan, somewhere around $225 times 12 plus that $283 deductible. So our yearly spending would be about $3,000. And again, that really doesn't matter whether you utilize your insurance frequently or not. Those are the costs that you're going to be responsible for. I mean, I guess technically you might not meet that Part B deductible if you don't go to the doctor at all, but this is a pretty low deductible. Now compare that with Plan G, the high deductible version. Now this one is a little bit more variable. So you're based on the information again that I put in, you could see a plan somewhere between $31 to $75. So let's say we've got a plan at $50 per month times 12. So $600 yearly spending. That's the minimum that you might spend. Now, how much more you spend is determined by how frequently you utilize your insurance. So let's say that you only spend $1,000 of your deductible. Well, then that means that your yearly medical spending would be $1,600. Of course, it could be less, but again, it could be more. The maximum deductible in 2026 is $2,950. So again, let's do what we say, $50 times 12, that's our yearly spending, plus $2,950. So that brings our max spending, based on the info that we put in, $3,550. So you could pay as little as $600 if you basically never use your insurance, or as much as $3,550. So what is going to determine whether the traditional Plan G is better for you versus the high deductible version? Well, of course, it's determined by the premium that you're able to access. If you can get a Medigap plan with a lower monthly premium, that may be the way to go. Or if you're someone that has more frequent medical spending, then the traditional Plan G might be the way to go. But if you're somebody that can't access that low premium Plan G premium, or if you're somebody that doesn't have as elaborate medical needs, then that high deductible version might save you money. Now, based on how the numbers work out for you, these types of plans can be great. If you're healthy or don't see doctors that often, but you want nationwide access and you're comfortable taking some risks. But remember, Medicare supplement plans do not offer prescription drug coverage. There's no additional benefits like dental, vision, and hearing, so you will still need plans that offer that as well. And there could be a little bit more financial risk if you have major medical needs. Now, these types of plans are really growing in popularity, especially for those that are priced out of traditional Plan G and those that are healthier, younger, or earlier retirees. Now let's talk about a plan that's actually decreasing in popularity. And this one may come as a surprise. It's Medicare Advantage plans, the PPO versions. And for years, these were sort of considered maybe the best of both worlds, but they are losing steam fast. Now, PPOs became very popular in the first place because they offered the ability to go in and out of network, still very often with quite low or even $0 monthly premiums, and usually they'd offer those additional benefits like dental, vision, hearing, and prescription drug. But they are fading in 2026. Plans are closing. Over 2 million people are losing their plan. Benefits are being reduced, out-of-network costs are rising, and insurance companies can't control costs anymore. PPOs are more expensive for insurers to run, and when costs become too high, benefits get cut. So if you're on a PPO, make sure you review your annual notice. This is the worst year we've seen for PPO plan reductions. So we've gone up and we've gone down. Let's talk about what's holding steady. And right now I want to talk about Medigap Plan N. So Medigap Plan N will often offer lower monthly premiums than Plan G, and it sits right in that sweet spot between affordability and risk. And you'll still have nationwide access, no networks, and generally speaking, not only are those rates lower, but the rate at which they increase year over year is lower as well. So in 2026, you'd be responsible for that Part B deductible, which is $283. Doctor's visits may have a copay of up to $20, ER visits of up to $50, and then there are those Part B excess charges. And that's really one of the more significant differences between Plan G and Plan N are those Part B excess charges. So when your doctor agrees to contract with Medicare, they agree to accept the amount that Medicare will pay out. However, some doctors can choose to charge up to 15% more, and this is known as a Part B excess charge. Now, they're not all that common, and they're not even allowable in all states. But if you live in a state in which it is permissible and your doctor does choose to charge that excess charge and your plan doesn't cover it, then it could be an unexpected financial burden. Still in all, Plan N will work great if you're comfortable with the occasional copay and you need a monthly premium that's lower than Medigap Plan G. And that's why we are continuing to see Plan N remain sort of at the flat level of popularity. Now, just like the high deductible version of Plan G, we're seeing an increase in popularity in the traditional Plan G as well. And there are many reasons for that. One of which is that Plan F, which historically was the most comprehensive coverage available to Medicare beneficiaries, is being phased out. And just below that is Plan G. And honestly, Plan G really is the gold standard for Medicare plans. It's the one that we most commonly recommend to our clients. And if you need assistance, you can reach us in the comments below or the number on the screen. We're licensed health insurance brokers, we're licensed nationwide, and there is absolutely no charge for our services. Now, of course, we do release these videos on a weekly basis, so please make sure to subscribe to stay up to date and like this video so we can get this information out there. All right, let's get back to it. So Plan G will basically cover everything except for that Part B deductible. Remember, Part B is your medical insurance. So basically, anytime you see a doctor, Medicare is going to bill Part B. That $283 deductible is once annually. Once you've met that, you're covered for the remainder of the year. Now, people love Plan G because it offers you financial peace of mind with the ultimate flexibility. You can go to any doctor or any hospital nationwide that accepts Medicare, and almost all do. There's no copays, no excess charges, and again, once you've met that Part B deductible, your needs will be covered for the rest of the calendar year. The only real downside to Plan G is that it tends to be one of the more expensive options. But again, when you run those numbers, you may find that Plan G is still the best bang for your buck. Like all Medicare supplement plans, there is no prescription coverage, so you will need a Part D plan as well, and there are no fringe benefits tacked on like dental, vision, or hearing. So if those are important to you, you may want a standalone plan for those as well. There are some downsides to Plan G, and that's really that, we see those rate increases every year for Medicare supplement plans. However, Plan G, what we're noticing right now is that it's tending to increase on a steeper rate than other plans, but again, that's because it's going to offer you the most comprehensive coverage. Still, if you can swing those monthly premiums, long term, this is likely your best bet. Because remember, it can be very difficult to switch to a different plan further down the line. Should you choose to enroll in a Medigap plan outside the initial 6-month window when you've turned 65 and enrolled in Part B, you may be subject to medical underwriting. That means you could be charged more or denied outright. So it's not so easy to plan hop when your medical needs increase. Now, because of this, we highly recommend that you look long term and pick a plan that you think will suit your needs not only now, but in the future as well. Now, the last plan that's growing in popularity is not necessarily one that we'd recommend, and those are Medicare Advantage HMO plans. And surprisingly, these have become the most popular option in the United States. These types of plans, often $0 or low monthly premiums, built-in prescription drug coverage, dental, vision, hearing, flex cards, gym memberships, over-the-counter benefits, and more. And for people on a fixed income, these additional benefits matter. But in this instance, you get what you pay for, and these types of plans will offer you the least amount of flexibility. There are networks, no out-of-network coverage except in the case of a true medical emergency. And these networks can be rather restrictive and in fact are shrinking as more and more doctors and hospitals jump the Medicare Advantage ship. This is largely to the issue of pre-authorization. Now, these are present in all types of Medicare Advantage plans, whether you opt for an HMO or a PPO. Medicare Advantage plans are managed care plans. That means that between you and your doctor and the treatment or service that they've recommended stands your insurance carrier. They must first pre-approve or pre-authorize this service or treatment. This can take a lot of paperwork, a lot of headaches, and there can be denials and delays in care. And although these types of plans can offer cost savings for younger, healthier individuals, remember that the coverage is traditionally local, not nationwide, and it can be very difficult to switch to a Medigap plan later on. So these types of plans are best if your doctors are in network and you live in an area with strong provider access or budget is a major concern. Now, here's the truth that we seldom say out loud. There is no Medicare plan that is perfect. Every option is a trade-off. Cost, access, flexibility, and risk are all things you need to take into consideration when making your choice. The biggest mistake you can make is choosing a plan based on price alone. But the reality is, sometimes price is what ultimately dictates whether you can enroll in a plan or not. So if you need our assistance, you can reach us in the comments below or at the number on the screen. We are licensed health insurance brokers. We're licensed nationwide, and there's absolutely no charge for our services. If you'd like to learn more about the differences between Medicare Advantage and Medicare Supplement plans, I'll put that video over here, as well as our All About Medicare playlist. And before you go, make sure to like and subscribe. We'll see you next time.